Are your investments healthy enough to handle a dramatic downturn? It's time to put your portfolio through its paces. Jim Lineweaver is here with a financial stress test that will determine if your strategies can take a licking and keep on ticking. Jim is a certified financial planner professional with the Lineweaver Financial Group. Welcome back to the show.
Well, congratulations on the 800th episode.
Thanks. We're real happy about that.
You look great for all those episodes.
Thank you so much. Well, we're talking about investments, though. So
Yes.
most investors have this goal of maximizing returns. That's like this single-minded thing. Is that really a problem?
Well, it can be, because a lot of times if you get that tunnel vision and you want to just go for the return, for the high end, you got to assume also in the bad times you're going to look at a big downturn. So it's all about a balance between risk and return and making sure that you're lining the portfolio up for your expectations, because if you can't handle a big loss on your portfolio, you may want to restructure that and not just be shooting for the returns, but some downside protection as well.
Okay, well, it seems pretty steady right now. Do we really have to be panicking about the portfolios at this moment?
Well, you should never panic. It doesn't matter what time of the year it is or what time of the market cycle it is. But what happens is we have been relatively sideways for the last couple of years. So maybe some dividend producing things have helped buffer portfolios and things along the way. But it's just been within the last 10 years that we have to remember that back between October of 2007 and March of 2009, the S&P 500 and the equity stocks fell 57%. So that's not that long ago. So what you want to make sure you do is, as you're measuring these barometers of risk and things, that you're not taking on too much risk for your portfolio, especially if you're into retirement.
Okay, so people have to test their reactions, but we're not the only ones who have to do that, correct?
We're not. After the fallout of 07, 09, also way back in 2001 and 2, what ends up happening is the Federal Reserve put in certain testing measurements for a lot of their financial institutions. So what they're going to look at is deep recession, and they're going to run through scenarios of a very sharp rise in unemployment, 50% drop in equity prices, taking houses all the way back in pricing to 2001, and how would that institution survive? So it's a good thing that they're trying to do this proactively as opposed to reactively, but not only does the Federal Reserve doing this, but everybody else should be doing this on their own portfolios as well.
So how do we do it on a personal level?
Yeah, well, there's a couple good guidelines that you want to look at. When you look at your portfolio and things, it's going to be hard at an individual level, but you know, if you're going to see a professional out there, they can have some software packages and different things to look at. But we actually have a stress test, if you will, and we can put any portfolio through it. So if your viewers have a portfolio and they like it, there won't be any charge for us to run it through this. But what it would literally do is it would actually help us measure in an up market, how far would you be going up relative to the index, but also if the market is going down, how far would you fall down? And you really want a risk to reward relationship where your highs are higher than the lows. So in other words, maybe it's 2 to 1, maybe it's 1 to 1/2, but you're going up faster than you'd actually be going down, and that'd be a good measure of a portfolio.
All right, sounds complicated. You need to see
It
some
can
help
be.
there. When it comes to the inevitable yet unforeseeable changes in the market, it's better to act now rather than react later. Follow Jim's advice and put your own portfolio through its stress test today. Need help? Give Jim a call. His number's next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or click to www.lineweaver.net. Next, how your